First up, all eyes are going to be on the Reserve Bank of India as it is scheduled to announce its monetary policy review. The RBI Governor, Raghuram Rajan, is widely expected to cut interest rates, a move that is expected to bring down EMIs for home loan borrowers and help companies raise cheaper funds to aid expansion plans. Inflation rates in India are currently at historic lows, and therefore the plunge in inflation rates has triggered some hope that the RBI governor would be likely to cut the interest rates in the monetary policy review. Now, the government has also made it more than obvious that it wants the RBI to cut rates, given the wider elbow room that the central bank enjoys from the current situation. Finance Minister Arun Jaitley last week asserted that common sense says that the interest rates should be coming down, but corporates and individual borrowers are hoping for lower borrowing rates to help their plans to buy houses and goods such as cars. And speaking of the Reserve Bank of India, well, we're getting in news that it has cut the repo rate by 0.50%. So that's, the bit of news that is coming in right now. And repo rate, of course, is the rate at which the Reserve Bank of India lends money to the banks. So right now, that's the bit of news coming in that the repo rate has been cut by 0.50%. We are expecting the Reserve Bank of India's Governor, Raghuram Rajan, to be speaking on this monetary policy. Let's go straight to Shweta Punch for more on this. Shweta, this was widely expected, but how is it expected to affect industry now?
Avantika, it actually, Dr. Rajan has somewhat surprised the markets and all of us because we were expecting him to be more cautious. A lot of us were expecting a 25 basis point cut. So by going ahead with a 50 basis point cut, he's taken an aggressive stand, which is quite interesting considering, we've always known Governor Rajan to be very cautious. Of course, we hope that some of this cut would be passed on to the consumers, would be passed on to the industry. There was a very loud clamor, for interest rates to be cut, and government was making very overt, statements saying that interest rates need to be cut and because, we need to stimulate demand in the economy. So now clearly the ball is in the court of the finance ministry because, in my humble opinion, I think Dr. Rajan has done more than what was expected of him. And now a lot of how India's growth trajectory shapes up would depend on the fiscal policy, would depend on what the central government, decides to do on a whole host of reforms that are clearly lagging and, how they decide to, pump up spending in the economy,
right,
which will create a ripple effect.
Absolutely. And Shweta, this is, already 3 rate cuts have been done this year. The 4th one that we're just seeing, you just said that, the cut by 50 basis points has caught you by surprise, as it would be in the finance industry. But I wanted to know why really has the governor made such a drastic cut? Is it because of the inflation, which is at its lowest right now?
So yes, inflation is, seems to be under control. If you look at the wholesale price index, it has been at near 0%, which is good news. But the RBI always looks at the consumer price inflation, which is also hovering around close to 4%. Now, the RBI had set a target of about 6%. There was a committee that was set up to set an inflation target for India, and that they had set a target of 6%. So if we look at that, yes, India is, much, at this point, India is quite, inflation in India seems to be quite under control. But Governor Rajan has also been cautious about it because he has said that we've not seen good rains and that is going to have an impact on inflation. So that's why he's been cautious about it. So it'll be interesting to see how inflation pans out. But clearly, he seems to be more convinced that inflation finally seems to be under control.
Let's just get in a quick word from Akash Jindal. Shweta, stay with us. Akash Jindal, who joins us right now. He's a market expert. Akash, thanks so much for joining us. Good morning and, welcome to India Today. I just wanted to understand this. How will this, cut kickstart the investment cycle?
Well, today the morning is really good. I must say it's in a true sense a good morning because why so this interest cut was well deserved. The economy required it. In fact, I have been saying during the last policy also that 50 basis point cut is something which the economy needs. See, now we all know inflation is already under control, whether it's WPI, wholesale price inflation, or consumer price inflation. Both are reasonably under control. Apart from that, because of China crash, commodities, whether it's crude oil or other commodities which mainly constitute inflation, they are already under severe control. They are already quite depressed. So we don't expect inflation to grow for another at least 2 to 4 months. So this was an opportune time to cut the rates of interest. Now to answer your specific question of how would it impact, now what would happen is because of lower rate of interest, in the market, people would be tempted to buy new homes, new cars, new two-wheelers. Now it's very simple. If one new home is sold, if one new car is sold, so many industries directly and indirectly benefit. So many people directly get employment, indirectly get employment out of that. Secondly, what happens is for corporates were not putting up new plants because whenever a new plant has to be put up, money has to be taken on interest also.
Right.
For corporates now, cost of putting new plants would be reduced because their interest cost would be reduced, which would mean higher profitability for them. So the main issue which has been there for the past 2 years, that investment cycle had stopped. Even Indian corporates are not investing in India. Our Prime Minister has done a great effort by visiting US and trying to woo in US investors, and he has been successful also up to a certain extent. But apart from that, reality of the day is that not even the big Indian corporates have been investing in India because higher interest rates were a hindrance. There was no gap between the income and the interest they had to pay. So now because of lower rates of interest, now the investors, the corporates, they would be tempted to invest. And apart from that, as I have told you, there would be sale of fresh cars, fresh houses. With those sales, now the entire cycle of the economy would grow. I'll give you a small example. Everybody knows.
Akash, I just wanted to ask you there that, of course, this has been done to spur a stuttering economy in the country. But are there fears that this is the fourth cut? This could also, in some ways or the other, flare up inflation once again?
I don't think so. Because in India, the inflation which we have seen in the recent past is basically food inflation.
Exactly.
Now, food inflation is not something which can be compressed by monetary control. I'll give you a very rustic answer to that. Now, if somebody is eating 4 chapatis just because the rates of interest are lower, he wouldn't start eating 5 chapatis. Now, this could be true in case of buying a car. In case I have already a car and I want to buy another Honda City or Skoda, and in case the interest rates are lesser, then I may be tempted to buy another car, or in case they are higher, I may not buy a car or a new bungalow. But that would be for all these things, not for food inflation. In food inflation, the demand can't be compressed or increased. See, if somebody, if a child has to consume 1 glass of milk, I mean, he has to consume and he must consume 1 glass of milk. So that is something. So I don't think any loss in decreasing the rate of interest. In fact, this is something which was required and which was very important for the economy. Rather, I'll put a contrary to this. What happens is, in case you reduce the rates of interest, what happens is there would be more production. Now, more production of things could, in fact, lower prices of many things. So, though I have a lot of respect for the RBI governor and his policies, but I think this is something which was long due, and I'm quite happy that it has happened today. This is not only good for the markets, whether it's equity markets or real estate market. this is good for everybody, including our BPL brothers and sisters who are staying in villages. Yeah.
All right, Akash. Thank you so much for joining us and throwing some more light on this latest bit of news that has come in. Shweta and Akash Jindal, thank you both. We'll go now straight to the press conference that we are seeing on our screens right now. The Reserve Bank of India's Governor Raghuram Rajan will be speaking shortly. Let's listen in.
For cutting interest rates have been met. The January 2016 target of 6% inflation is likely to be achieved. Therefore, the focus should now shift to bringing inflation to around 5% by the end of fiscal 2016-17. With weakening global activity since our last review, commodity prices will remain contained for a while. With low industrial capacity utilization, more domestic demand is needed to substitute for weakening global demand so that the domestic investment cycle picks up. The coming Pay Commission report could add substantial fiscal stimulus to domestic demand, but the government has reaffirmed its desire to respect its fiscal targets and improve the quality of its spending. Under these circumstances, the Reserve Bank intends to be accommodative to the extent possible, given its inflation goals, while recognizing that continuing government policy implementation, structural reforms, and corporate actions leading to higher productivity will be the primary impetus for sustainable growth. Now, we do believe that investment, as well as durable goods purchases, are likely to respond more strongly if there's more certainty about the extent of monetary stimulus in the pipeline, even if transmission is slow. Therefore, the Reserve Bank has front-loaded policy action by a reduction in the policy rate by 50 basis points. Given our year-ahead projections of inflation, this ensures that 1 year expected Treasury bill real interest rates of about 1.5 to 2%, which we think is appropriate for this stage of the recovery. While the Reserve Bank's stance will continue to be accommodative, the focus of monetary action for the near term will shift to working with the government to ensure that impediments to banks passing on the bulk of the cumulative 125 basis points cut in the policy rate are removed. This includes, amongst other things, reviewing small savings rates. The Reserve Bank will continue to be vigilant for signs that monetary policy adjustments are needed to keep the economy on the target disinflationary path. Now, we've laid out a number of other policies today. We have a medium-term framework for foreign portfolio investment in government bonds with a target of allowing FPI ownership of up to 5% by March 2018. We'll also open FPI investment in state government bonds with a target of 2% by March 2018. Now, altogether, this implies incremental space of about $25 to $30 billion over the next 2.5 years, of which $5 billion will open up immediately over the next 6 months. The intent here is to create more room steadily to slant towards long-term investors and to help develop domestic markets. We've also opened to masala bonds. I think that's the name they're called by. These are rupee bonds, and we intend them to have a minimum maturity of 5 years. They can be issued abroad, or they will be issued abroad. For the moment, they will come under the overall corporate FPI limit. We will bring down the ceiling on SLR securities held under HTM from 22% to 21.5% with effect from the fortnight beginning January 9, 2016. Thereafter, the SLR and HTM ceiling will be brought down by 0.25% every quarter till March 31st, 2017. I should say 0.25 percentage points. Now, we've announced increased participation by a variety of players in various markets in our ongoing efforts to improve participation and market depth. We will increase the limit for resident entities for hedging their foreign exchange exposures in the OTC market from US dollars 250,000 to US dollars 1 million without the production of any underlying documents, subject to the submission of a simple declaration. We're also going to examine the possibility of participation by financially sophisticated investors up to certain limits in currency markets without underlying exposure. Let me conclude these opening remarks. The global environment is looking weak for a variety of reasons. Undoubtedly, this is not good news for India because no country is an island. But there is opportunity in even the worst news. We can stand out as a country which still promises strong, sustainable growth. The possibility of realizing this opportunity should encourage us to redouble our efforts, to implement our past announcements, and to undertake new reforms. The economy has legacy problems to deal with, and there are no silver bullets, as I have said repeatedly. The government, other regulators, and the RBI are turning around this economy through hard work, through pragmatic policies that are not ideological, but based on what works. At the same time, if we are to avoid the mistakes of the past, policy goals have to be steady and predictable so that everyone knows where we are going and can make long-term investments accordingly. I hope these remarks help you understand the policies we have announced today. Thank you.
Thank you, Governor. Shobna, please announce your name in the mic with the organization and then ask your question.
Shobna Subramanian, Financial Express. So thank you for the Diwali gift. But, how much do you think, you yourself say, even if transmission is slow, you expect the stimulus to drive the investment. So how much transmission are you looking at? What do you think would be reasonable, say, in the next 6 months or 7 months?
We're going to be working very hard with the government on this. So the intent here is to not sort of point fingers at other people, but to start moving quickly on ensuring that transmission does take place. Of course, there are limits to how fast it can happen, but we believe that some will take place very soon and more will take place over time. We want to create the conditions, some of which will include things like the changes in the calculation of the base rate, some of which will include government actions such as reviewing the small savings interest schemes. But the intent is to work together to move forward so that transmission takes place. Now, I must say here that some transmission is already taking place through markets. The short-term money markets have come down, the long-term bond markets have yields have come down, so that will help. But I think other actions will also be forthcoming in the next few days.
Nisha?
Okay, the RBI governor there springing a surprise and cutting the repo rate by 50 basis points. In fact, economists were expecting a 25 basis point cut in the repo rate. Repo rate, remember, is the amount of money that, the Reserve Bank of India lends to commercial banks in the event of any shortfall of funds. So right now, that repo rate has been cut by 50 basis points to 6.7%. Let's just understand this as to how will this now impact people like you and me. What does this really mean? Well, what it really means is lower EMI on car, auto loans and on other very essential important commodities. So that's why everybody is saying that this is really a Diwali gift. And, what it means is increased spending that is going to help the economy and more jobs. That is also something that, is expected out of this cut that has been done by the Reserve Bank of India's governor. More jobs if companies invest more. Lower rate on fixed deposits, lower rate on government and company bonds as well. Okay, but the Reserve Bank of India, there, the governor saying that they will still remain vigilant. They will be extra cautious and see really how do things pan out after this cut that has been announced. And remember, the markets have already reacted quite positively to the news of the repo rate being cut by 50 basis points.